JPMorgan CEO Jamie Dimon warns against U.S. inflation, praises I. Julia Smith last updated, April 8, 2024, 14:11 EDT 2-minute read. A graph with cryptocurrencies overlaid. JPMorgan CEO Jamie Dimon warned his fellow shareholders of increased U.S. inflation due to a growing need for increased spending in his annual shareholder letter published on Monday. Covering everything from AI to policymaking, Dimon's letter lauded the U.S. economy for being resilient despite an unsettling landscape, particularly in the face of growing inflation concerns. JPMorgan CEO reveals U.S. inflation concerns. There is also a growing need for increased spending as we continue transitioning to a greener economy, restructuring global supply chains, boosting military expenditure, and battling rising healthcare costs, the letter read. This may lead to stickier inflation and higher rates the markets expect. The JPMorgan CEO further expressed his disbelief at the odds of a soft landing, wherein a central bank is able to decrease inflation without collapsing the economy into a recession. These markets seem to be pricing in at a 70% to 80% chance of a soft landing. Modest growth along with declining inflation and interest rates, Dimon said. I believe the odds are a lot lower than that. Jamie Dimon suggests high interest rates ahead. The JPMorgan CEO's comments come as broader national discussions on whether or not the Fed may cut interest rates for the third time this year following Friday's landmark jobs report. Persistent inflationary worries could damage the crypto sector as increased financial strain forces consumers to make stricter spending choices. Despite the public's previous general optimism, Dimon claimed that JPMorgan was prepared for a very broad range of interest rates, from 2% to 8% or even more. Economically, the worst-case scenario would be stagflation, which would not only come with higher interest rates but also with higher credit losses, lower business volumes, and more difficult markets, Dimon said. I will be extraordinary for JPMorgan, CEO says. In addition to addressing inflation concerns, Dimon highlighted that I's impact at JPMorgan will be extraordinary, suggesting it will virtually augment every job. While we do not know the full effect or the precise rate at which AI will change our business, or how it will affect society at large, we are completely convinced the consequences will be extraordinary and possibly as transformational as some of the major technological inventions of the past several hundred years. Think the printing press, the steam engine, electricity, computing, and the internet, among others, Dimon claimed. The JPMorgan CEO stated the private bank has grown its AI organization materially and now boasts more than 2,000 AI/machine learning ML experts and data scientists. According to the International Money Fund, an estimated 40% of all jobs will be affected by the development of AI. It's currently unclear how the drastic pace of AI and inflation concerns may impact the future of the crypto industry as a whole. Follow us on Google News.